There is a Bitcoin whale that I have been tracking for the last few weeks, as you can see in this image. And in today's video, we're going to talk about it. This image that you're seeing on your screen comes from a Facebook post that I had posted on June 18th. For context, this is where price was at the time, at around $20,500. In this post, I was explaining how I had been tracking a Bitcoin whale on Binance Spot exchange for the past few weeks. The reason I track Spot is because that is where I know people want to invest in Bitcoin, not just trade the price action of it. Because as you hopefully know by now, when you trade futures and you open long or short positions, all you're doing is trading the difference in price of the asset. You're not actually trading the asset itself. So in order to gauge the belief in Bitcoin when it's not doing too well, I want to know where people are looking to buy Bitcoin in big amounts of money, because it means that those people believe it's a good price. Over the past few weeks, I've been tracking this order that is stated around 2.1K. That is 2,100 Bitcoin worth of orders. And it has successfully been picking the wick lows and the wick highs in the entire range. What I noticed before price dropped was that there was a limit order in place at 17,500. Now, if you've been watching this channel for a while, you will know that it is my suspicion that there are two players that really control the price of Bitcoin. One are the market makers, which we talk about all the time, and two are the Bitcoin miners, because mining is a business, and like any other business, they have profit and loss and break-even levels. When Bitcoin starts to drop too much to the point that miners are at risk of losing money, they will usually step in to buy. But there was a bigger game going on this time. Upon investigation, I found that the cost of production at this current time was $17,342 per Bitcoin, meaning if Bitcoin was to drop below that number, miners would start to become unprofitable. Now, like any business, there is a period of time that you would be willing to go on being unprofitable, but at some point in time, you need to turn that around or shut up shop. As it turns out, when Bitcoin did break the 20K level over the weekend, we managed to hold just above that miners break-even level. This adds to my suspicion that miners defend their break-even level. But why did we even get down there? In the moment as price was dropping, I found some pretty dirty games that were going on behind the scenes, and I posted about it on my TikTok. And I'm going to insert that here. Bitcoin just broke 20K, and you know, if there's anyone who's going to show you the dirty games that go on behind the scenes, it's your girl right here. Boy, do I have a doozy for you. Check this out. First of all, looking at a high block, what I want you to notice here is how small the circles are since the 14th of June as we move across for a really long period of time, meaning not many people were opening up leverage positions. Now, look how big they just got on that drop just then. Each one of these three circles alone represent over $300 million worth of short positions each that were just opened on that drop. All the market maker needs to do next week is turn price around just to 20,400, and all of those people are going to get liquidated. So did the market maker intentionally trigger this move down just so that they can buy? Let's have a look at this. This here is the big candle that just broke that 20K. Now I'm going to remove the candle and show you the footprint. This now shows you the buys during that candle and the sells during that candle. Look at this right down here. Who would know to buy $16 million worth of a leveraged long position on BitMEX at the very bottom of that wick? This led me to then further investigate miners, and I then posted another update, and I want you to watch this. So we know that market makers control the price of Bitcoin according to the liquidity that is available to them through our open position. But there's another player in the crypto market that we need to be aware of, and that is the Bitcoin miners. You see, to them, mining Bitcoin is a business, and just like any other business, they have profit levels, break-even levels, and loss levels that they need to keep a hold of. In a bull market, they accumulate Bitcoin over time, and over time they get rewarded by not selling it. However, there comes a point when Bitcoin turns around and starts to head down that the price heads towards their break-even level and they have to make a decision. Now, dirty games go on in business just like they do in the financial markets, and I believe there is a pretty dirty game that's going on right now with Bitcoin miners. See, as the price of Bitcoin drops, more and more miners get closer and closer to becoming unprofitable or potentially not even being able to cover loans and expenses and things like that. So like any business, at some point they have to make the decision. Do we shut up shop or do we sell our business? And that's the point where the profitable miners can step in and buy those businesses at a discount. Therefore, you have to wonder, are the bigger miners right now intentionally selling their Bitcoin so that they can drive price down to put other miners out of business, get that leverage to be able to buy their businesses at a discount? Or if it is the goal of the bigger miners to take out the smaller miners and collect their businesses for further expansion in the next bull market, I would not be surprised if we saw Bitcoin hit around that 17K mark. If you're not following me on my other forms of social media, be sure to follow me, especially on my Twitter and on my TikTok, because if I can provide you short written updates in between my YouTube videos, I will do that on Twitter. But sometimes it takes more information, and I will do that in a quick 2-minute TikTok. So be sure to grab my social media links down below to make sure that you're getting the official ones, because there are many scam accounts out there. So what does this mean moving forward? If the theory is correct that the larger miners are trying to shake out the smaller miners, then it is likely that we will revisit at some point in time that 17.5K area. And it is also likely that we may drop below it, because dropping below it is going to cause max pain. We also know that there's an issue with Celsius and the liquidation level for Celsius currently being somewhere around 13K. That's a whole other conversation that we'll save for another video. Now let's revisit those Binance spot orders from my original post. This here was the drop to 18K on the weekend, and when I zoom into that area, you can see here that 2.1K orders bought up right at the bottom of this wick, and that is where price reversed. Why do we care about that now? Because that's in the past. Well, we care about it because we want to see every time it gets wicked into, another 2.1K arrives, and we want to see, what is this person thinking right now? We can see that those 2.1K orders aren't currently above price. This worries me because it makes me think that maybe we are going to head down one more time, but where to? What we can see on the current candle here, we now have 2.5K orders here at $18,000. This is making me suspicious that we will revisit this area. It doesn't mean we won't push up a little bit further first from where price is now. We may go up before down, but this is making me think that we will revisit around $18,000 again at some point soon. This isn't necessarily something to trade off. It's just something I've been tracking for a while and wanted to share with you. What I want you to keep in mind for this video is that even though we broke the 2018 high, which has never been done in any other cycle before, at this point in time, the case for the miners break-even level is definitely something worth keeping an eye on. And like every other theory out there, theories are true until they're broken. Now let's talk about the price action. So when Bitcoin did break and head down here, a lot of short leverage was built up, which we could see in high block, and we were sitting at around 21 billion. As we know, anything over 20 billion is usually where the market makers have collected enough liquidity to turn the market around should they want to. There were 3 areas up to around 20,400 that gave the market makers the most liquidity should they want to turn price around. And as you can see, price did come back up to that area and even a little bit higher. This area here cleared the board of that leverage, and so now we start fresh. What we have going on currently this week is really tricky price action. First of all, when you look at the whole week so far, since 5 p.m. New York when the CME's opened, we really haven't done anything except go sideways. We're in a range that takes us from 19,600 to about 20,900. Does the market maker want higher prices, or are they accumulating to bring price back down? Let's have a look at what's going on in high block. So now looking at high block, you can see that all that previous short leverage has now been cleared out, whether it's from people taking profits or being liquidated, one or the other, and probably a combination of both. Since that point, we have been flip-flopping either side between delta and accumulating contracts both sides. If the market maker wants to continue driving price higher, the biggest area of liquidity is here between around $21,000 to $22,000. What worries me me about what's happening right now is that a lot of long positions are being built as the price gets higher. You can see that from the circle starting quite small down here when we actually created a W formation, and this area here being the right place to go long. But instead, most positions got opened up around here. As you can see, the circles get bigger, and this is Bitcoin around 19,900 to 20K kind of area. You can also see from the spikes out here that a lot more positions have been opened closer to 20K than were opened down at 18K. That means the market maker doesn't really have to drop the price too far to liquidate the current open long positions. However, when the delta is down here, they need to encourage more positions in order for them to get the most bang for their buck. So will they encourage more people to go short, or will they encourage more people to go long? When you look at price action just being in a range, it makes it more difficult to identify. However, if we look at this for what it is, we have higher lows being created basically for this entire week so far, and we have a couple of wicks into this area of interest. There's two ways to read this. We're either going to spike into this another time and fail again. That's going to be a telltale sign, because that will then give us 3 hits to the same area without being able to break it. And that is usually a very bearish signal. That is also going to be a rejection of the 1 hour 200 EMA. This purple line up here is the 15-minute 800 EMA, which is equal to the 1 hour 200 EMA. So the thing to watch out for today is the 3 hits to the high that may come during the Asia session. As you can see, price is heading up there now. If the market makers don't break beyond this zone, then it's likely we're going to head back down today. If the next attempt into this zone, however, does break through it, then it's likely that we will go for that 21 to 22K liquidity. That may also give us a rejection of the 1 hour 200 EMA. And that's what you need to watch really carefully, because a rejection of that with an inverted hammer or another bearish candlestick pattern is going to be a very good place to short. But it would be dependent on breaking through this area first. Another very good area to short is going to be failure to break through this area of interest. If that were to all happen, it would be likely that the market makers bring price back down to this high block area here at around the $19,000 area. And that's the area that I showed you where most long positions are currently open. Now, we have some news events this week that are pretty big ones that we really need to be aware of. And there is a very good chance that price will continue up until those news events. Looking at Forex Factory, again, this calendar is in Melbourne time. You can go to forexfactory.com/calendar and click on this time here to change it to your time zone. But for my time zone, tomorrow night at 11:30 p.m., this is the one we want to watch out for. Fed Chair Powell testifies. And then again, there is another one here on Friday at midnight where Fed Chair Powell testifies again. This is the one that could potentially cause the midweek reversal. Now, looking at the higher time frames, on the 1 hour time frame, it is looking like we already have an M formation, because the 1 hour time frame is showing a very clear W formation, and then we have one hit to the high here, another one here, and another one here. So on a higher time frame, we would be expecting a pullback at some point soon. Ideally, I want to see price make it back into this area of interest one more time, and reject is going to give me more confidence. But if this candle closes in the next hour as a bearish looking candle, then it's likely that this is an M formation. So that's what I'm looking at for short-term day trades. I really am only interested in short positions. Unless we can break above this area, then I'll reassess, but I am feeling that we will see some more downside. So that's what I'm thinking for the current price action. The only thing that's throwing me off with a short position right now is the fact that the news event isn't until tomorrow night. So I'm not ruling out one more spike up just to tap onto this 200 EMA. If I get it, I will certainly be looking for a bearish confirmation, ideally just for a better risk to reward. The only thing that would make me switch to a long bias at this point in time would be if price could break above the 200 EMA, retest it successfully and hold it, then I may start looking for long positions, but still only until the news event tomorrow night. That's all I have for you. I hope you enjoyed this video. If you are looking for somewhere to long and and short Bitcoin, my preferred exchange is OKX. There is a link in the description of this video to get you up to $500 sign up bonuses for new accounts and also 15% off trading fees. So be sure to use that link down below. And if you learned something in this video, please hit that like and subscribe button, turn the bell notification to all, and leave a comment down below, as it's a really great way to give back to the channel. I'll see you tomorrow for the Wednesday update. Have the most amazing day.